I bet my entire account plus some margin on just one stock. Big mistake, huge mistake. Ever lost so much money on one trade you consider to stop investing entirely? That happened to me this week. In just 2 days, I lost more money than I ever lost before. Why? Why did I risk everything? And what exactly went wrong? In the next few minutes, I will show you how I went from feeling super confident to total shame and desperation. If nothing else, I hope it helps you avoid the same stupid mistakes. By the way, I'm Adri. Investing in stock is my passion until last week when it became my worst nightmare. It all began last Sunday. My girlfriend asked me to go for a walk. I said no. I was stuck in this room researching fashion companies with my spreadsheets. First mistake already, ignoring real-life opportunity for researching stock. What kind of a genius! Anyway, I started with Louis Vuitton numbers. This guy, Carlo Vigna, asked me, so I compiled the price, earnings, growth, risk, value ratio of 28. I checked Nike, value ratio of 24, Under Armour, 32, Lululemon, 20, and on. But at a certain point, I found the hidden gem. The holy grail of valuation. A fashion stock so cheap, I ignore everything around me. Yes, including my poor girlfriend that was saying something like,
Adri, dai, let's watch a movie.
On paper, this was the deal of the century. $103 in share price, $10 in earning per share, 6% growth, 30 out of 100 risk, a value ratio of 9.47. Value ratio under 10 is super rare. It's like winning the lottery. At least that's what I thought. Anyway, I double-check everything, still the same. So my mind started dreaming, could Abercrombie and Fitch be the deal of the year? Should I bet big? But here is where things got interesting. I was checking my YouTube channel for your comments when the algorithm recommended me this video. And guess what? It's a 20-minute show about how Hollister, an Abercrombie's brand, had a great search volume this year, and how Gen Z is going crazy for the camo hoodie sold by Hollister and Abercrombie. By the way, Damn Money, great channel, check them out. They do social arbitrage. Basically, they find the hot trending topics on TikTok, Instagram, Google Trend, and they trade them before Wall Street realize. Anyway, it's the complete opposite method compared to the value ratio, yet they both reach the same conclusion. Abercrombie is undervalued. Two opposite styles, same buy signal. How can this fail? Come Monday, I was so convinced I didn't want to wait. At opening, I bet everything, plus some margin. Buying 400 shares at 103.70 for a total of $41,480. That's huge for me. But I felt bulletproof. My value ratio was saying it's deeply undervalued and the social trend backed it up. What could possibly go wrong? Within hours, the stock sank 7%. Don't know if you've heard something about President Trump and tariffs. I've checked. Tariffs are barely relevant for Abercrombie right now. They expect $5 million in extra expenses, over a $500 million free cash flow for 2025. Doesn't matter. The market freaked out and punished them, minus 7%. And then comes the earning day. The results, not incredible as hoped, but decent, a bit in both revenue and profit. But the guidance was weak. Only 3 to 5% growth for this year. Investor panicked and pushed the share price down another 15% pre-market from $103 to $80. I lost $9,480 in just 2 days. I wanted to hide under a blanket, quit YouTube, smoke a joint, or just pretend this never happened. Have you ever felt this way? I've had great win in the past, but it doesn't matter. It's really true. The pain of losing, it's way stronger than the joy of winning. On top of that, I have to do this publicly on YouTube, and it feels even worse, I hate looking like an idiot, but I fucked up. Anyway, after a few days, I got the courage to look at Abercrombie's number, and the guidance for this year, it's $11 earning per share and a big buyback plan for 2025. That's about 8 price to earning ratio for a company with very little debt, 900 million in cash, growing at 3 to 5, let's say 4%, still is growing. I don't know. Am I missing something, or is the market just irrational? If I hadn't spent everything on it already, I would probably average down. Instead, I'm stuck holding too much of it, but I do believe it's super cheap. Like value ratio now, it's at 7.89. Yet I'm down 7 grand with all my cash stuck in Abercrombie, while I wanted to use that cash to open a position on Google or Health Beauty, but I can't. Lessons learned. Double confirmation can be a trap. Both my value ratio and Dumb Money social data both screamed buy, but it was still a disaster. Your due diligence and your ideas, it's all that matter. Don't listen to me, don't listen to anyone. Even if Warren Buffett is buying, it's not a reason to buy more. Never bet too big. Even if it all sounds perfect, the future is unknown, and the unknown can destroy you and can be very painful. Especially short term, the market is irrational. Overreaction happens all the time. It's actually a good thing, so it gave us opportunities. But again, never bet everything on one idea. So what am I doing now? I refuse to sell a stock with a sub 10 value ratio. I'm convinced that if I do sell, it will pop to 150 like this, and I will feel even more stupid, more foolish. So I'm waiting. I don't want to take any rash decision. I'm not in the mood to take any smart decision right now. I will just do some more valuation videos for you guys, and I will try to find my balance back. It would be great if you can check Abercrombie yourself and tell me what you think. I find it super cheap, but I'm the guy that just burned 7 grand in a week. So don't trust me. This is definitely not financial advice. The market can really be a bitch sometimes, like last week. Would be great if you can drop a comment or subscribe to cheer me up. It's not gonna give you my money back, but it's something. Thank you again for watching. Peace out.